Title of this slide refers to solar cars, and I think that's pretty self-explanatory. You don't need to say solar-powered cars. When you talk about a solar car, it seems intuitive that you're referring to a vehicle that powers itself by the sun. Now, before we start talking about that, I wanted to point out these cool vehicles that you'll find out all over the world. So they're referred to as Tuk Tuks, and here you can see these absolute legends racing them. And you'll have these powered by humans in Bangladesh. They'll be powered by motorcycles in most other places like Thailand. And in the Philippines, they'll actually power these by Jeeps. They're a larger version referred to as Jeepneys. And the only reason that I can come up with as to why you'll find these or variations of these vehicles all over the world, and of course, drivers that can sort you out with just about anything from drugs to prostitutes, is that they're the most efficient form of transportation. Once you get some power and you have three wheels, they work really well. Now, in the US, we don't refer to these as tuk-tuks. They call them autocycles. And what had happened is that a lot of vehicle manufacturers were trying to skirt safety regulations by using three wheels instead of four. So they passed this Autocycle Safety Act, and nothing really came of it. And as of now in the US, there's no federal level classification for three-wheeled vehicles, what they define as a motor vehicle with three wheels, a fully enclosed occupant compartment, and a steering wheel. So certainly some manufacturers will try to get around that definition, but you get the point. In the US, over half the US has autocycle laws specific to these types of vehicles, with most states requiring only a car driver's license. Now, the reason you don't see a lot of these on the streets is because they look like this. Some people probably wouldn't be caught dead in one of these, but you will see them around, and that's because manufacturers are trying to make these more commonplace. Companies like Electra Mechanica and Arcimoto. So in the Portland, Oregon area, you're likely to see vehicles from Arcimoto, and both these firms are publicly traded. We last wrote about them back in 2019, and you can see how the share prices have performed over time. So Electra Mechanica has lost 67%, and Arcimoto 77% compared to a NASDAQ gain of 42%. That's the opportunity cost. And you can see the volatility here. That's what we were warning about, is that there was a lot of hype surrounding electric vehicles. Now, when we talk about these performance numbers, they're not accurate. Why? Because these companies have been diluting the hell out of their investors. You can see here the number of shares outstanding. This chart shows numbers. Well, one would be 2019, 2020, 21, 2022. So this is how rapidly they're issuing shares to try and survive. And in the meantime, this is what traction doesn't look like for both these companies. You can see they're incurring loads of losses and selling a minuscule amount of vehicles, certainly nothing that we would consider meaningful. So we've always advised to stay away from electric vehicle companies that are trying to bring a concept to market using crowdfunding. And I believe at least one of these firms used Reg A offerings, while the other was a graduate from the over-the-counter club. In both cases, we strongly advise our subscribers and readers to stay away from these. And speaking of our subscribers, they make every word we speak possible. So anyone who pays our bills is a client, and they have access to our brightest and sometimes sober minds by simply replying to any email. And I speak with lots of our paying subscribers, and one had put forth a few days back an emphatic plea for us to objectively analyze a company he believes in. And the response that he got was, well, we'll tear it to shreds. And that wasn't the proper response. And he said, verbatim here, it deserves an honest evaluation and your support within the standards of objective journalism. And James is absolutely right. We need to give every company we look at a fair shake, and we can't presume anything. Here's the company. So it's called Aptera, and they are raising money through a Reg A plus equity raise, something we strongly advise investors to always avoid. And when it comes to the product, certainly it's very compelling. And on the right-hand side here, James did an excellent job of describing the selling points. So it could reduce our dependence on oil, has the lowest coefficient of drag in history for any vehicle. It's affordable at $25,000 up to $50,000 depending on the range. And it's a solar-powered electric car that could be truly off-grid, allowing the user to have, let's say, 40 to 100 miles a day with no charge. So it not only changes our dependence on oil, but also electricity. So everything sounds great on paper. There's no doubt this is a spectacular vehicle, and everybody put a lot of time and energy into developing it, but that and $5 won't get you coffee at Starbucks these days. So Aptera publicly debuted the Gamma version of this vehicle. You can see here, this was last month, according to an article on the event. And when we dug into this, the first thing we wanted to know was something about the company's roots. And here's an article from, let's say, coming up on 11 years ago that shows the first iteration of Aptera. It's titled Aptera Collapse, How and Why It Happened. And in 2006, the founders, who are the founders of the next iteration of the company today, they wanted to build an ultra efficient three-wheel electric car, and 5,000 Californians placed a deposit of $500. You can read the article. What ended up happening is that they were chasing funding from the Department of Energy, like a lot of electric vehicle companies were, and they weren't able to get that funding. They closed their doors. Well, they reopened them in 2019. And the question that was asked in this article, and it's exactly the question we're asking, is, can this three-wheel two-seater that looks like a Cessna cabin on wheels ever going to sell the 20,000 units per year that the executives say it can? Well, perhaps, because after they launched in late 2019, they now have over 25,000 reservations from customers in 100 countries. And a reservation will cost you $100, but we saw lots of articles out there where the reservation could be had for just $70 with a coupon. So the company says this time it's different, that before funding didn't exist for EV programs like it does today. Well, that's actually wrong. You weren't able to capture the funding that existed back then because companies like Fisker and Tesla were getting hundreds of millions of dollars. So the challenges you faced were the inability to get the funding that was available. So today it's different, and that back then, it wasn't the right time for Aptera to fulfill their mission, and now is the right time. So there's, of course, a Reg A plus offering looking to solicit upwards of $40 million. First thing to note, there's no marketplace for the resale of your securities. They're worthless unless they begin trading on the over-the-counter or NASDAQ or whatnot. They plan to deliver vehicles in late 2022 and ramp their production next year. And here's the bullet point that should have everybody quite puzzled. There's an implied market cap here of $783 million. That's an incredible sum of money to value a company at that hasn't really done much. And when you look at the financials, this pretty much cuts through the noise, and you can see that in under assets here, they have about 20 million in cash, and the total assets are about $23 million. And you can see when it comes to what they're spending on, a good chunk of their operating expenses is general, selling, and administrative. Of course, they have to put time and effort into programs like their brand ambassadorship here, where they have 700 global volunteers that touting the merits of their vehicles. That's fine and dandy to raise brand awareness, but we'd rather they focused on selling the vehicles that they've already taken deposits for. And there's also something else interesting in their financials. It's these safe agreements. I'm not going to get into this a whole lot, but what it comes down to is that they took some money from investors, somewhere around $2.5 million, and that's currently sitting on their balance sheet as an $80 million liability. This is potentially a problem if you're an investor who expects a reasonable return on your capital. they shouldn't be just giving away equity. And of course, that's what they have been doing as they continue to do Reg A plus offerings, presumably because institutional investors don't want anything to do with a solar powered car, perhaps because they have an extensive history of not really doing anything. So we first wrote, this would have been coming up on 4 years ago, will we ever have electric cars with solar panels? And we pointed out here that you can't have solar only cars, at least according to this subject matter expert, Tom Lombardo, even with panels at 100% efficiency. What you can have is a solar powered car where you have solar panels and batteries. And one of the companies back then we looked at was Lightyear, and their Lightyear 1 was supposed to be available in 2020. And the latest news here, you can see this article in the bottom, is that it's now the world's most aerodynamic car, well, second to the firm that we're talking about today, Aptera. And it happens to be the first solar EV to market that's just months away. Well, that's great. We'll wait to see if that actually happens. And when you look at the other company that we talked about back then, that was a firm called Sono Motors, and they raised 53 million euros in what was said to be the largest crowdfunding campaign in European history, or one of. 70% of that money, over 75% came from Scion reservation holders. So individuals who were planning to buy a car, and they were expecting that car as early as 2019. Well, the January 2020 piece by Electric said that production was postponed until September 2021. And then they say here, we intend to begin delivering cars in the first half of 2023. Great. And since their IPO in November 2021, shares have lost 94% of their value. That's no surprise. And in every single one of these cases that we've been talking about, you're looking at firms that have a snowball's chance in hell of getting an electric vehicle into production, supporting it, selling it, marketing it, all while relying on retail investors across the globe to pitch in $1,000 each. It's just not going to happen. And we've warned investors about electric vehicle stocks. There's a lot of hype there. A solar car is a very easy to understand thesis, and people are lining up to plunk down their money. And when we looked at Aptera, we gave it a fair shake, as our subscriber suggested we should. And here are the bullet points that have us running in the other directions. We don't give management teams second chances. You failed the first time around, we're not giving you a second chance. We don't invest pre-revenue, ever. You have to have meaningful revenues. We avoid Reg A plus offerings like the plague. And when we evaluate all these firms, we do so using the same methodology. That's only fair. So just to conclude, this is an extremely capital intensive and competitive niche that's littered with failures and bankruptcies. And you'd have to have balls the size of grapefruits to put down a deposit on one of these contraptions, much less invest in a company that's trying to produce these things. So investing in any EV company trying to peddle a three-wheeler, we think, is a bad idea, no matter how superior the product is, no matter how well it's engineered. It's not a good idea. This is a David and Goliath story, and as risk-averse investors, we're just not interested. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks for taking the time to watch this today.